Agree Realty Stock, ticker symbol ADC, another famous monthly dividend paying stock. But can it compete with Realty Income? ADC stock is down 12% year to date, underperforming the overall market. And on the 13th of February, ADC presented earnings with a beat on FFO and revenue. Most people love ADC stock because of the dividends, and I understand why with dividend yield at 5.3% and of course the monthly payouts. However, if we look at the total returns including dividends in the past 5 years, we see that ADC only returned 2%, while the S&P 500 is at nearly 100%. And with the stock coming down lately and earnings recently released, it is the perfect time to do an analysis. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does ADC do? Agree Realty Corporation operates as a fully integrated real estate investment trust, mainly focused on the ownership, acquisition, development and management of retail properties net leased to industry-leading tenants. Looking at the fourth quarter results, we see that net income was reported at $0.44 per share, flat year over year. When looking at the most important number here, the FFO, we see a 3.4% increase year over year. This is already looking a little bit better. It has to be said that it is on the low side. I prefer a higher growth number here. Dividends increased with 2.9% year over year, which is very nice. And with a quarterly dividend of roughly $0.75, we see that FFO covers that pretty easily. Net debt to EBITDA is sitting at 4.7, which is a bit on the low side. I prefer 5 to 6.5 here. An interesting number is the comparison between different REITs and the 5-year AFFO per share compound annual growth rate. ADC is sitting at the top with 7%. In total, ADC has 2,135 properties and the biggest sector is grocery stores with 9.6%. To me, this looks really good since I prefer this number under 10%. It's the same with the tenants. The biggest tenant is Walmart with 6.1%. Again, I prefer this number under 10%, so this is also looking really good to me. ADC has an interesting mix of national tenants, franchise tenants and regional tenants. This really helps the company to grow steadily. The average lease term is at 10.5 years, which is looking pretty good. And Lowe's is the biggest tenant in terms of ground lease with 14%. To me, this all looks pretty good. ADC has a history of high investment activity. In 2023, we see the volume coming down a bit, which is something to keep your eye on, of course. In here we see that monthly dividends have been increasing at a 6% compound annual growth rate over the last 10 years. Looking really good to me. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. ADC is a 5.6 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at 14, indicating they might be undervalued. Later in this video I will show you my 3 price targets for ADC stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 537 million, and in this graph we see that revenue went up really nice and steady in the past decade. To me, this looks really good for a REIT. We see that margins are going down in the long run. To me, this doesn't look any good, and this is definitely something to keep your eye on. EPS is going up and down in the past decade. It isn't really going anywhere, so definitely keep an eye on this number as well. Analysis expect that in the coming years the EPS will slowly increase to $2. We don't see a lot of growth here, which is in line with current performance. For the revenue, it is looking pretty interesting with 8 to 12% growth per year except for 2027, which feels like a number that is a little bit diluting since only 2 analyses gave their estimates. Other than that, it is looking really good. Return on assets is sitting at 2%, which is a low number. Return on equity is looking low as well. And the most important number, return on invested capital, is sitting at 2%, which is a low number. To me, this isn't looking really exciting and I was hoping to see higher numbers here. Current ratio is at 0.74, which is looking really good for a REIT. Nothing really special to mention here. Another interesting thing is the debt. ADC has 2.4 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. ADC has 10 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up quite steady over the past decade. To me, this looks really good. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 5.32%, which is a great number. And keep in mind they pay a monthly dividend. Annual payout is at $2.96 and payout ratio is at 75%, which is the average for a REIT. The growth numbers aren't really in line with the truth, so I think Seeking Alpha isn't really fully updated here. In here we see the dividends paid since 2012. They increase the dividends at a low pace, but in the long run this really adds up. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to increase steadily from here. And overall these dividends look really interesting to me, but how about the historical returns? I decided to compare ADC stock with the overall market, in this case the S&P 500. Next to that I added Realty Income, the famous monthly dividend paying company. On the 5-year chart we see that ADC massively underperformed the S&P 500. In total, ADC stock returned roughly 3%, while the S&P 500 returned almost 100%. And keep in mind, this is including dividends. Realty Income isn't looking any better. On the 1-year chart it looks again not any good for both ADC and Realty Income. The S&P 500 beats them both very easily with 33% return, while ADC and Realty Income are returning negative numbers here. On the 6-month chart it is again the S&P 500 that is the winner here. But this time Realty Income and ADC managed to almost get out of the negative returns. On the 1-month chart it is again the same story with the S&P 500 being the big winner. So bottom line, ADC underperformed the S&P 500 long term and short term. So could this be the perfect time to buy ADC stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 10, 12 and 14% based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 28, 30 and 32%. And for the free cash flow margin I'm putting in 70, 72 and 74%. For the PE ratio I'm putting in 20 and for the price to free cash flow I'm putting in 13, 14 and 15. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now ADC stock is around $55. I hit analyze and we see a lot of green numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $58. We have a mid price target of $71 and we have a high price target of $88. To me, the low to mid price target is the most justified here, indicating the stock could be undervalued. Which price target do you think is the most justified here? Let me know in the comments down below. My final conclusion on ADC is that I love the business. It is currently in my portfolio and with reason. The company is performing really steady and consistent in terms of growth and fundamentals. The only concern I have right now are the margins, which is of course a big thing. From a dividend point of view, things look really good with great dividend growth and a great yield. On top of that, they pay a monthly dividend, which is always interesting. From a value point of view, things look pretty good either. They are undervalued in my opinion, and this means that I keep buying ADC stock in the coming months. I think it is a great company at a great price right now. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.